Good evening, ladies and gentlemen. You're watching Rush Hour with me, Sumita Karir, and over the next 30 minutes, we'll be taking you through all the top stories that we're tracking from the world of politics, business, finance, and geopolitics. But before we begin the show, here's a quick note. Well, here's a quick thank you to all of you for your reposing your trust in ET Now, or the #1 English business news channel. It's been like that for 12 consecutive weeks, and thank you very much once again for posing your faith in ET Now and deciding to stay ahead of the curve by tuning into ET Now, and we do hope that you will continue with your unmatched support to the channel. And let's move on to a top story that we're discussing tonight. Well, this is about the Indian rupee that has tumbled to record low of 84.50 against the US dollar. Now, the underwhelming trend of the Indian equity market surpassing its previous all-time low closing level of 84.5 recorded on November 14th. In fact, consistent FII outflows and stronger dollar on the back of Trump trade are some of the key factors which are driving this decline in the rupee. Now, the US dollar has also strengthened as a safe haven currency amidst escalating Russia-Ukraine tensions. So the big question is, will the rupee see more weakness in days to come? To discuss that and many more aspects related to currency movements, I'm now joined by Santosh Rao, the head of research and partner, Manhattan Venture Partners. Thank you, Mr. Rao, for joining us right here on ET Now. Now, speaking of the depreciation in rupee, the rupee has largely been range bound in the past year, and that hovered between 83 and 84 rupees to the dollar. In fact, many emerging markets currencies were losing ground. So to this recent depreciation that we've seen in the rupee, there's several reasons. Like I stated, FII outflows and stronger dollar on the back of Trump 2.0 trade deficit. But what, in your opinion, is the biggest reason that's driving the rupee down, and how critical are these levels that we're seeing the rupee trade?
I agree with all the reasons you gave. By the way, congratulations on your ranking. Great on your channel ranking, but on a separate topic. So the incremental news in the last few days is the new narrative building that the Fed may not cut rates as aggressively as thought, which is keeping the 10-year yield up. And that is attracting more, that is keeping the dollar strong, and that is going to weigh on the emerging market currencies, most currencies, and also India. I think that's a big part. That's an incremental development since last few weeks, I think. So overall, I think the Trump strength is playing into that. Dollar has also become a safe haven. The outflows from India is also weighing on the rupee. The RBI intervenes to stop that slide, but in the near term, it does take a hit. So that's what's happening right now. So there's back and forth there. It will continue to feel the pressure as we go forward, because we don't know exactly what Trump is. Trump has a lot of plans. It's a lot of pro-growth plans, but will he be able to execute? And all those issues have to be weighed out. But at this point, it just looks like the dollar is going to be strong. The US economy is going to be strong, and inflation is going to be very sticky for much longer. So I think those are the issues weighing on the rupee as well.
Right. Right. So, Mr. Rao, you're hinting at further weakening of the rupee. Would that be correct to say? And if yes, then what's the range that you see the rupee settling in the next few months? Some of the economists who we've spoken to are of the opinion that the rupee could depreciate further up to 10%. Would you agree?
Yeah, I don't know. I can't give you the exact number, but generally the pressure is going to be downward. It's going to push the rupee down versus the dollar. So I think that's a given. I'm not an exact currency analyst on a day-to-day basis, but just reading the tea leaves and listening to all the experts on the currency side, yes, the pressure is going to be there. Not just India, but a lot of Asian currencies as well. So that's there. But till we see some direction, get visibility as to where exactly how Trump wants to address the inflation issue. Is he going to spike it up more by putting the tariffs across the board, or is he going to be prudent about it? And so that's going to weigh on the bond yields, and that's going to weigh on the attractiveness of the U.S. investments vis-a-vis other currencies. So things like that. So I think I would say 10%. Okay, probably. I cannot pin that, but generally the direction is going to be up. I mean, down for rupee and up for dollar.
Absolutely. Absolutely, Mr. Rao, and there's there's been a lot of uncertainty, at least building up to that Trump administration. Trump will be swearing in as a president of the United States once again in January, and that definitely will be something to watch out for. But so much is being said about persistent outflows of foreign funds. How much of a reversal do you see back to the Indian markets? Because you do have the China factor, Chinese stimulus pulling people back into the country, and then the US, like you also rightly said, is attracting inflows.
Yes, I think there will be a limit to that. It's not going to be just continued outflow. At some point, the world has to recognize, or prudent investors have to recognize, is India is the fastest growing economy in the world. It has a stable government, and there's tremendous scope ahead in various areas, in infrastructure, in all the other areas as well, in pharmaceuticals. So India is a very good market, and you talk to any expert, they will mention India right up front in terms of the leading emerging markets. So money will come back, but in the near term, there is a short-term trade going on. There is money flowing out because US is definitely, on a relative basis, the risk reward is much better outside, but things will flow back in because at the end of the day, like I said, India is the best destination for prudent money, long-term money, smart money.
Absolutely, Mr. Rao. And as you speak, we're also seeing a consumption slowdown that's being witnessed in industries, although some of the sectors have reported decent festive numbers. But there are consumption worries, especially as far as urban pockets are concerned. And if this rupee depreciation happens further, how much of an impact do you see on industries like auto, electronics, oil and pharma, which are heavily import-driven?
Yes, it'll have a negative effect. For sure. I mean that's a given. But let's see how deep and how long. That's the whole issue. At this point, it's tough to say. But there is definitely some downward pressure on all those industries who are dependent on imports or who are importing a lot of stuff. So that's a natural economic equation right there. So if the rupee goes down, yes, it'll cost more to import a lot of stuff. So those industries will feel the pressure. The good thing going for India is that it's a consumption economy. At some point, things will turn around as long as they keep the economy steady, keep rates steady, and continue, maybe do more cuts if needed, and keep the economy really going. It should reverse, and things will come back to normal because at the end of the day, like I said, it is a strong consumption economy where consumers drive the market. They're not totally dependent on the external markets. So that's a good thing for India.
Right, sir. But there have been worries on, the inflation trajectory. If I may point that out, in fact, for the month of October saw the highest inflation rate in perhaps more than a year. So that worry really remains. But what at this point in time investors like yourselves are betting big on? Which themes are you betting big on?
Well, let me start with the US. I mean, that's where our primary focus is, which is essentially we are doing a barbell strategy where we have technology on one hand, because that continues to be a growth strategy, and AI is definitely the growth engine on this side. So technology on one hand. On the other hand, I think in anticipation of a recovering economy and pro-growth strategies, we're going with cyclicals such as financials and industrials and materials, because all those are essential ingredients. So I think we have a barbell strategy and will capture both the cross currents going on right now. So I would stay with that. And similarly in India, I would think that kind of applies there as well. Kind of have a barbell strategy, stay with the high quality names. There's no room for speculation. Technology, I understand in India, technology is not that big a factor, but pharmaceuticals and industrials there as well, because it's a growing economy, a lot of investments going on in the infrastructure side. So that should benefit from all the policies that the Modi government is instituting there. But from the US side, it's really technology and the industrials and financials.
Absolutely, Mr. Rao. And so far as government capex is concerned, we'll have to see whether the government is able to maintain this sort of a capex and keep infusing monies for public consumption as well if, the rupee trajectory keeps going on. And of course, all eyes now on the RBI on how it manages that rupee-dollar relationship. On that note, thank you very much for joining us this evening and sharing your thoughts on this big story.
Thank you. Thanks for having me.
If you like this video, then like, share and subscribe to ET Now.